Let's do some Wyckoff distribution analysis on a Sunday. Hello Adrian, and welcome back once again. It's 7:30 p.m. UTC +8, and welcome once again to another episode of the Dang Oracle. Welcome everybody. Good evening. And I forgot my drink once again. I'll ask. Where is my drink? Hi Lex. Good evening. Hi Darwy. Good evening. Could you bring me my Gatorade in the fridge as well? Thank you. Yes. Hi Darren. Hi Darren. Good evening. I'll wait a few seconds before that everybody is here, I guess. But well, while we're doing that, maybe let's take a look at what is going on with the COVID situation, if any crazy numbers have been updated. So in the US, we are still over 1.6 million where we were at. Brazil, Russia are close to 350,000. United States and Spain are, are over 250,000. Let's take a look on how it looks on the chart. Here is the chart. Let's take. Hi Cedric. Good evening. So we are at 5.3 million confirmed cases. 2 million have recovered, and sadly enough, 340,000 people, over 340,000 people who have already passed away because of it. Let's take a look at the charts. So yeah, it's slowing down on the US, but still not flattening. Same for Brazil. Russia is still spiking up. Hi Gita. United Kingdom also still going up. Spain still going up, and Italy still going up, but slowing down a little bit. So yeah, things are still looking pretty bad actually. When it comes to the COVID situation. I mean, everybody is telling it's time to open up. It's time to restart things, but yeah, it doesn't look like it's going to happen, right? So what did we so yeah, now that everybody is here, let's go into our situation of yesterday. And of course, so much action happened yesterday. Incredible amount of action. We basically went sideways. So that's what happened. And like I told you guys, so we defined two major zones that we were looking at. One was around 9,350, as you know, above the green line, the EMA 55, and one was 9,050, which was around here. And we said if price would move above the green line, we might have a chance to go all the way up to this green box here. If the price would go down below the 9,050, we might go back down to this area once again here. But yeah, what I also said is most likely what the price is gonna do is just hang here in the middle for for during the weekend, and basically that is what happened, right? So nothing is resolved, nothing happened, and that's the reason why I told you guys it's always better not to be trading during the weekend, because you know that's usually what happens. And also we also have to understand that the CME chart was showing us around 9.2k. It didn't that doesn't change anything in the terms of the macro perspective, right? So hi Stephen, good evening, and welcome on this beautiful Sunday. So what can we do during this Sunday? Well, of course we can do a lot of things while the price is just going sideways, and yeah, Saturdays and to Monday usually hurt. Yeah, that's basically the reason, right? And like I said, we've got plenty of opportunities to trade, so we shouldn't be in too much of a rush. Like I said, there's so many opportunities with Bitcoin, with the movement, but during the weekend usually that's not the case. Well, not always, but usually. But I do think that tomorrow we'll see a lot of more action when CME markets are going to be opening. Hi Vermogen, good afternoon for you, good evening for me. Welcome as well. Good to have all of you guys here. So very little to the analysis that I can add in the short term. So we're kind of still waiting for a resolution, right? So we can check out what the probabilities are. If the probabilities are higher that we are going to go up or going to go down, sure, but we kind of went through that already yesterday. So what I did was checking more things in a more macro perspective, and as you know, I am checking out different probabilities and different theories, and one of them is of course the Wyckoff theory, right? So if we take a look at the Wyckoff theory, this is the distribution schematic for the Wyckoff events, the schematic number 2. And as you can see, this is the whole structure of it's separated into phases: phase A, phase B, phase C, phase D, phase E. And what happens is all of this, we form some sort of like two resistance lines, a high and a show of weakness in the market. And all of these abbreviations, you can look it up. Just type in distribution schematic Wyckoff events, and you can read about the whole theory of it. So basically, what I did is I put this theory and I've put it on the 4-hour Bitcoin chart, and you can see it immediately here. Click, ta-da! And this is basically what we can clearly see right now. So we have the upside here. We have our SO in phase A. We have our UT here, and then phase C, phase D, and probability. There's a probability that we are most likely going to go back down towards our range of phase A, which is in phase E. So I'll show you the picture once again. This is the picture, and maybe I'll put the screen next to it. 1 second. And the picture next to it here, like this. Oh, that doesn't show very clearly, does it? Okay, that doesn't work out. So yeah, you'll have to take a look at it. So basically what I did is exactly what is on that picture, right? Sorry, but I can't put it on top of each other somehow. Maybe I'll put it something like this. Can you see it like this? Yeah. So the most important part is actually the bottom, the right hand part, right? So we have our range here, which is our SO here, and our range here, and it's possible that we go back down more towards our where we started originally in our phase A. And if we take a look at that, is our around our 8.6K region, right? So where is it again? Let's go back. No, that's not it. Yep. So yeah. Oh, I moved it a little bit too much now. Choop. No. Okay, here. So where did we start off? Here, this zone here, around 8.6 to 8.7, I guess, something like that. Here, this block here, basically. So what basically the distribution pattern is then complete once we go down towards around this area once again. So that theory is basically telling us that most likely we'll be going another leg down towards that 8.6K or 8.5, 8.6K area, something around that range. And that kind of could make sense, right? If we look at our daily chart, where is that green box here? This green box here is exactly at 8.5 or 8.6K, right? So this is 8.7 and this is 8.6, yeah. So we have a little bit, we can actually broaden this box a little bit more towards this area. So I would say 8.550 to 8. Well, if we drop down, yeah, most likely we'll be dropping down towards this box here, something like this. So 8.550, 8.6K range. Let's put 8.6K. So if we take a look at the daily chart, we are forming some sort of what we can see, some sort of like a rising wedge as well, right? So a rising wedge usually not always, because it happened before, right? Remember, we had a rising wedge, but it broke to the upside rather than the downside. And what happens is usually what it will break down, and if the Wyckoff theory is correct, we will be ending up around this box. And what I've also told to you guys is if we end up in that box, I'll definitely try to do a long, because there's a lot of confluence area there, and most likely we won't be breaking up for the first time immediately, so we'll at least get a small bounce, if not a bigger bounce, right? So depending on what the price scenario is, but at least we will most likely get a small bounce, right? So once again, let's take a look on the macro perspective. So in the macro perspective, what the bulls are looking at is this is some sort of a triangle. Let's put it like this. So something like this, I guess. Yeah, some sort of like this, a triangle where basically price is just moving up here, then here, and then eventually it breaks up, right? So that's basically what the bulls are looking at, while the bears are looking at this as more like a descending wedge, descending wedge. So something like this, right here, and then we move this one a little bit further. So then price would be doing something like this, right? Up, down, then it breaks back up, and then up again, then eventually it breaks, most likely it breaks down all the way towards here. That's if we take a measured move of this, you can see if we take that, we will get somewhere around this 7.5K or something like that. So that's what the bears are looking at, right? So the bears are thinking, let's crash this price down towards the 7.5K area, and the bulls are thinking, let's push this price up towards the at first 10.5K area around here, and then let's see if we, of course, if we close above the 10.5K, we most likely be ending up at like 11.5 or something like that. That's basically the two macro perspectives. And yeah, although this channel is called the Dang Oracle, I cannot predict what will happen. It's one of those two situations, and we will most likely see the resolution of it by the end of this month. So yeah, good times will be coming either way. If you are a trader, what we can do is, of course, set up ourselves and position ourselves to see what the most likely situation is, and put a trade upon it, and according to our risk management, right? So those are the two macro perspectives. Another macro perspective that we should be looking at is the stocks on the 3-day, right? So let's take a look at the 3-day chart. I'll show you guys. Okay, let's take this chart. That's fine. So let's go to the 3-day chart. As you can see here on the 3-day chart, our stocks are beginning to go down here. Hi Alvin, good evening. Our stocks are beginning to go down here. We had our peak here on the 6th of May. Let's see what the price was on the 6th of May. 6th of May, the price was here on the top here, which is actually our top at the 10,095, something like that, 10,095 or something like that, right? So that was the top of our stocks. This is the bottom of our stocks on around the 13th of March, and that is actually correct, right? If you take a look on the price, price was the lowest at the 13th of March, as you can see. And then if we take a look here, where was our top here of our stocks once again on the 12th of February. 12th of February, let's take a look what the price was at the 12th of February. 12th of February, here was our top at 10,500 whatever, 10,550 or something like that. And let's move on. This was one of our bottom here. Bottom was on the 15th of December. Let's take a look on the 15th of December what the price was. 15th of December here. This is the 15th of December here. This is the price on the 15th of December. It wasn't the absolute bottom. We actually went a little bit lower here, but pretty much the bottom, right? Pretty much the bottom. So yeah, and let's take a look a little bit further up. So here is another top that we had. Top here on between the 24th and the 27th of June. Let's see what the price was on 24 and 27. 24 and 27 of June. 24 here. Yeah, price was 13,900 something, which was our top as well. So, back testing all of that tells me that the 3-day stocks are quite effective in finding like some sort of like tops and bottoms, right? So if this is going to be breaking down, that means that we will most likely have reached a top right there. But of course, what can happen is, of course, it goes down and here and then moves back up, right? So that's something that we cannot predict. But to be very fair, these stocks are actually telling us that most likely we will have another leg down rather than up. The probabilities at least are higher that we are going back down a little bit more than up. So if we go back to our weekly chart, like I said, nothing is still lost for the bears, for the bulls or anything like that. What we want to see is some sort of pattern that goes down and we form some sort of a bull flag, but we have to still maintain price above all of these moving averages. That is the key component here. So we have to slowly go down and accumulate and push everything up afterwards, after we have accumulated everything. So that can be an accumulation pattern, and we have to make sure that our stocks on the weekly chart definitely are cooling down, and our RSI is enough cooled enough down as well, right? So what we want to see is something like this, like I said, slowly down, and then some sort of bull flag, and then we break up from there, right? So do I think that we most likely will be getting a leg down more? Yeah, most likely. So everything that we're looking for right now is showing us most likely we will have continuation of our downtrend over the next week as well. But then the key, like I said, the key component is, of course, do we actually push up from there, from that part? Yes or no, right? So that'll be the key question, right? But for now, just looking at all the indicators that we've gone through, probabilities are more higher that we are gonna go one leg down more than before we go back up. Hi Nikolai, good evening as well to you. But on the other hand, like I said, if we are looking at the bullish way, we can clearly see weekly is still above all the moving averages. Yesterday we actually closed also above the yellow line once again, as you can see here, still holding the EMA 21 on the daily, which is very good and very strong. So as long as we keep holding that EMA, things are fine. Of course, things are good. But the problem is, like I said, it doesn't seem like we have enough strength right now to be pushing upwards, at least during this weekend. Hi Harris, good evening to you as well. Hi Vahe, hi all. Hi Mark, Allison and William, thank you for following and welcome to the channel. Please make yourself at home and chat away with the people that are here in the channel. Don't be afraid, we are not going to bite. But yeah, right now we are still here. We are still in the price, still supporting the green box, as you can see here. Yesterday, all what the price did was just, you know, move a little bit up and move a little bit down. So nothing that special. But yeah, more and more indicators are actually, in the short term, at least in the short term, are showing that most likely we'll be heading towards one more leg down. So most likely somewhere around this green box here. Well, most likely if we are gonna go down there, I'll move my green box actually a little bit lower. Most likely somewhere around this one, more likely to this. Yeah. Although we have a lot of support here, as you can see, we have a lot of support here already. I do think that price is if there's enough once we start breaking this area here, I think people will become bearish and just push the price a little bit lower. So I'm expecting somewhere around here actually, right? So the bottom of this these wicks here, you can see here the wicks here. Yeah, so yeah, 8.6k ish, something like that. Yeah, that's what I think is going to be happening. But is it going to be happening now? Maybe, but we'll see. It's still weekend, so do the people have enough bitcoins to be shorting it? Maybe. But something else, on-chain analysis, we can clearly see this. let me go to my on-chain analysis chart. As you can see here, whenever I always take notice, whenever a big amount of Bitcoins is getting transferred into an exchange, usually that's bad news. Usually, well, when people put Bitcoins into an exchange, is to sell it, right? And as you can see right here, around on May 24, 3:26 a.m., we had an inflow of 46,000 onto the exchange, as you can see here. 46,000. So a spike here in Bitcoins that are moving into the exchange. The price has not reflected it yet, but yeah, obviously that's not really a good thing to be seeing on chain analysis, right? But yeah, so right now we can see technical in the technical aspect. Yeah. We tried. You can clearly see here we tried to break the EMA 55, but we failed a couple of times now. All right, you can see, but hope is not completely lost just yet. We haven't broken down from the green box, but it doesn't look good. It doesn't look good, at least in the short term. It doesn't look good. Okay, and yeah. Is this logical assumption? Midterm S&P companies were reporting lower profits for Q2, which would drive down BTC in late June. Well, Adam, that's a good thing. That's a good question. So there's a big question, right? Right now, if we are looking on a pure technical way on to thanks. Oops. Here. In pure TA, we can see that for example, Nasdaq stocks are going up, right? If we take a quick look at Nasdaq, where's my Nasdaq chart? One second. Here, this is Nasdaq. Can't be bearish on this chart, right? Just take a look at this. Like it's just going up, bounced off the EMA 21, going up, bounced off the EMA 21, bouncing off the EMA 100s even now, and still going up. This is the all-time high here. Doesn't mean that we're gonna break all-time high, probably, right? I mean, it doesn't seem that it's stopping right now, right? So if all the stocks with all the money printing and this and that goes up, most likely Bitcoin is going to go up as well, right? Because like I've been explaining before, it sounds very illogical that stock market is going up while the economy is basically in a lockdown and crashing. The reason for that is because all the money that people are getting or they're not spending, right? They're not spending on anything except for basic needs, and the rest goes into investments, right? So yeah, it's crazy, but this looks like a super bullish chart. So if Nasdaq keeps going up, if S&P keeps going up, then most likely Bitcoin is going up as well. So although I am a little bit bearish short term, that doesn't mean that I'm bearish long term. Like I keep saying, I'm when we are looking at the weekly, yeah, sure, this is a weekly downtrend, right? But the possibilities that we can break this one is a lot higher than, let's say, here in beginning of the year or something like that. I never really thought here that we would have the chance to be breaking it, right? Even here, I never really thought that we would be breaking this resistance at that point as well. So yeah, we'll see, but we do have a chance as long as we keep price above all these moving averages. Then things will work out and we'll be fine. But yeah, short term, I'm more inclined to be bearish right now than bullish, as in for a trade, right? I'm talking for a trade. I'm not talking about long term or anything like that, because yeah, that's it. Hi Moncol, welcome to the channel as well. Yeah. Yeah, John Knights. I don't tell, or I don't say where I'm trading, or this and that. I don't do any promotions or for any products. So yeah, no need to ask. Yeah. So we're up. Yeah. So yeah, like I said, this looks to me like uh like distribution, Wyckoff distribution. So yeah, do we get that phase E where we go back down towards this previous order block here from phase A? So something like this, slowly down. Maybe, right? Maybe, but it's definitely a possibility. And then yeah, the 3-day Stokes. It's a powerful indicator, right? It's a powerful indicator that Art is telling us that there's a possibility that we will be going more down than up, at least in the short term. Okay. Yes, Mokol, we're going down. But like I said, I do expect us to at least have a substantial bounce when we are reaching that green box there. Yeah. Boom boom. What I want to say. Okay. So if let's make some measured moves, right? So if we take a look, and if this is just a triangle, what would be the measured move? Well, the measured move would be, if we break back down, would be exactly into this, as you can see, into this green box that I've drawn already, where I expect to long there, right? Because at least, like I said, even if we break down, this is the EMA 21, right? What will happen is the EMA 21 will of course continue to go something like this, slowly down, because the price will be below the EMA 21. So what will happen is, even if we break back down, there will always be at least a bounce towards near that EMA 21 before we crash back down lower. And of course, we also have a chance to be reverting and going back up, right? So one of those two things, but for me, it's kind of logical to be putting a position there. Definitely when we can see that we had major support here, major support here before. So I don't think that it will be breaking immediately in one shot. But of course, it can happen, right? It can happen. And then if we take a measured move, and if this is some sort of like a bear flag, so if this is some sort of a bear flag, then of course the leg is a little bit longer. Then we can see that the price is more likely to go to the second green box, which is around 8,200 area, 8,100 to 8,200 area. Why is that important? Because, well, the simple moving average 200 is there, which is currently at 8,046, and the EMA 200, which is at 8,187. So yeah, one of those two areas. So if this green box doesn't hold, we can actually drop down all the way there. But for me, like I said, it's quite easy to put a stop loss on this area and turn it into a short because once again we have a very risk defined area here. We have this wick here and we have this wick here. So that would be just if we just wick below, or price just goes below to those two wicks from our previous past, and then I'll just switch it into a short, and I'll be targeting this green box down below here, right? So like I said, we always have to have some sort of a master plan, have some sort of not a backup plan, have to have a strategy where we can still make profit, although that things are not going the right, the 100% correct way that we are thinking that it will go to. Right? That's what trading is about. We cannot be emotional about, oh my god, but you said it will go to 14,000. What are you saying? And be sad about it, right? we still have to make money, and that's, yeah. So I know everybody was a good boy and asked for Santa for Bitcoin 20,000 for Christmas, but Santa isn't real. Sorry to break that bubble. Anyways, so since that we have closed our 12-hour candle close, let's take a look at what the expected moves are. So let's take my quick thoughts once again. So more likely that we since that we are below this green box here, and we even touched the 9050 level, this kind of confirms for me that most likely we will be going back down towards this near this green box, or at least retouch this 8.9k area once again. So where would I be looking at in my expected moves? Well, first of all, in the same area right here at 9300. 9300, and the bottom line would be around 8900, something like that. I'm sorry, Jaden. I'm sorry. Did I hurt your feelings? I'm sorry if I did that. But yeah, that's what I expected. That's what that's the range that I would be thinking about, right? So let's take a look what the expected moves say. So let's open it up. Expected moves. Expected moves. The first standard deviation on the top side is 9265, which is around the area that I expected. And on the bottom side, the first standard deviation is 9000. So that's actually a little bit higher than I'm expecting. That means that we are contracting, and that also means that we will most likely have a substantial move within the next 12 hours, right? So. And what does that mean? Well, in the next 12 hours, we have our daily close, we have our CME that is opening. So yeah, a lot of big things. But what is kind of contradicting right now is the following, right? Look at this. The 12-hour Stokes are actually starting to curl up and not down. MACD is actually starting to tick up and not down. So let's take a look at the RSI. RSI is still below the EMA, but if it, as you can see here, it will cross up if we break above 9238, and 9238 is of course a very interesting number, because 9238 is exactly above, yes, you've guessed it, the yellow line, or the EMA 21. Of course, if the RSI, if the price goes above the EMA 21, of course we will most likely get a leg up a little bit higher, right? So that makes sense. Right, so 12-hour EMA is telling us something is brewing. And let's take a look at the daily. That's still the 12-hour. Sorry, this is the daily. Daily our Stokes are still curling down. Okay, that's correct, right? I mean, it's price is most likely going to go down. So here, and RSI is still down as well. And when are we going to be crossing up on the daily? 9484. Yes, Adam, the correlation is still very high between BTC and S&P actually. Okay, so yeah, on the daily, still down, and of course 9.5k is the key area on the daily, because if we break through the 9.5k, we'll most likely head up towards the 9.8k, which is something that we've talked about before already as well. So let's take a look on the 4-hour chart to see what the indicators are telling us on the 4-hour chart once a trading view is loading. Okay, so first of all, as you can see, if we look at the HVP, woo, a lot of flashing, a lot of colors. So yeah, it actually expanded a little bit here already because we had a little move downwards. So that means that most likely there will be continuation of the downtrend as well. That is what our HVP on the 4-hour is saying, because basically it was flashing because there was a relative big move upcoming, and yeah, we had it just now during the live stream. Not during the live stream, here this big gigantic red candle here, right? So that's what the HVP was telling us that was gonna happen, and now it's just expanding a little bit. So that means most likely more continuation to the downside as well. So we kind of have more confirmation now that most likely will be going down a little bit more than up. Let's take a look at the Stokes. Stokes are curling back down, as you can see on the 4-hour as well. And let's take a look at our RSI. RSI is below the EMA, and it will only cross up if we go above 9,140 in the next 4-hour candle close. So if we cross back 9,140, most likely we'll have a little bounce towards the upside once again, right? Okay, and kind of makes sense, because that would mean that we would just be returning towards this green box here, but now that green box is turning into resistance, most likely because we've been breaking down from it quite a couple of times already. So although we might get a dead cat bounce, or this was already the dead cat bounce, we can do something like this, right? So yeah, yep, but still we're on in this range here, you know, but yeah, probabilities are obviously higher that we are going towards the downside than the upside right now. Hi Leonard, thank you for following and welcome to the channel. Make yourself at home. Yeah, the reason why I'm Adam, the reason why I'm saying that the S&P is still very correlated is because the main trends is still effectively the same as BTC actually. So let's take a look. We have some sort of like a triple top, something like that. And if we actually look on our BTC, we have similar pattern, right? So we have our triple top here. And what the S&P is actually saying is we do get a drop, but we make some sort of a V-shaped correction back up. So yeah, it's going to be very interesting next week, because yeah, it's going to be interesting. That doesn't mean that price cannot go down a little bit more, right? So like I said, I do expect us to most likely break this rising wedge type of pattern and then go maybe one leg more down, similar to what the Wyckoff theory is telling us. But am I really bearish immediately already? Not that really just yet. Okay, just to be clear, because some people tell me that I'm way too bearish, but some people tell me that I'm way too bullish as well. I'm not bearish, I'm not bullish. I'm waiting for a perfect spot where I can enter some trades, and I'm preparing myself actually for tomorrow, you know, ready for war, ready for battle. So what do I wanted to say? One more thing. Oh yeah, one more thing is I just wanted to show you guys the Dow Jones. I've made this already, right? So before, this is the psychology here, where we get hope, euphoria, and then most likely complacency is where we are maybe currently at, as you can see here, where we have that push up, and then we have a very long way down if that would be the case. Are you bearish? Am I bearish on the S&P right now? No, I'm not bearish on the S&P right now, no. But it's a chance, there's a possibility that we can have a major crash, but right now immediately, no. I don't think you can be bearish on this chart. Like it's just not bearish at all, right? Look at this chart. This is the daily. I mean, like I said, it's the same as the Nasdaq basically, right? You can't be bearish at this chart. So I do think that we will go towards, let's say, this top here, something like that. Here, let's say this area here, this box, let's put it like that. So maybe 3,000 something, and then I'll re-evaluate things. I'll be very careful when we reach around that area or something like that. But if the S&P goes to 3,000 something, then Bitcoin most likely is gonna go to, you know, 10.5 or something like that at least, right? So let's see. But yeah, you can't really be bearish on this chart, right? But yeah. Anyways, so what I wanted to say is, yeah, you can be bearish on that chart, but it has happened a couple of times before where we thought that we would have a V-shaped correction. So let me go towards on the Dow Jones in September 2001. 1 second. Let me remove all of that first. Why isn't it moving? Wait, let me refresh it. it went to my old chart. Okay, 1 second. Remove that, and then go to, and remove all of this. Well, the EMA, so I can leave it. Let's go to 2001 in September, somewhere. September. Go. Okay, where is the price? 1 second. Of course, it's lower. Here. So, what I wanted to show you guys is in September 2001. Why is it 2015? I said 2001. Did I incorrect? September 2001. Yeah, go. Oh, it doesn't have the data. That's why. Okay, let's go to the S&P. S&P 500. What? This one. Do we have data for 2001? We have data. No, it doesn't have data for 2001. Okay, let's go to 1929 then. That's another example. No, wait. Why? How come I don't have the data for that? It's in the Dow Jones. Should have Dow Jones. Okay, once again. Okay, let's go to 2001. Ah, here. Yes. Oof, finally. So yeah, this is in 2001. As you can see here, we had a major crash, which is very similar to what we had, a couple of months ago. Is it already a couple of months ago? Yeah, I guess so. March 13, right? Something like that. So a little bit over a month. We had a major crash, and then we sort of have like a V-shaped correction, as you can see here, right? So this is kind of very similar to what we are forming right now. So a lot of people didn't believe that we could have a V-shaped correction, and actually you can see here price went basically almost back to the previous price right here. So that's why we call it V-shaped correction. However, if we scroll a little bit further, you can clearly see here, then afterwards, after that V-shaped sort of correction, we entered a lower low, like a huge crash all the way, huge depression all the way down, as you can see here, and it actually goes lower, and I think a little bit lower. Yeah, see here, and then we formed a sort of like a W correction to revert. But as you can see here, yeah, if that's the case, and that's possibly as well, right? What we're doing right now, we kind of make some sort of like a V-shaped correction. Things look very, very good, and then like a little bit of a very delayed effect or something like that. The delayed effect, we get a major crash, which is 2 times below the previous previous crash, as you can see here. So that's something that we have to be keeping ourselves in mind. That's why I'm saying, like, sure, we can go back up higher and even back to our original prices of before, but we still have to be very, very careful, because I do believe that the effects of this money printing and the effects of the virus, the coronavirus, maybe we'll have a second wave, third wave, and so on. It will have some sort of effect on the economy, or on the stock market, or on the price on the later stage. Another example is actually a little bit in 1929. So let's take a look at 1929. Let's just go there. Go. Wait, didn't do it again. I don't have data apparently when I take this from the 1929. That's weird. It should have. Let's see. 1 second. Yeah, it does have. I don't know why. There's a problem with the error with the search engine. Yeah, here. So yeah, 1929. This is basically what I wanted to show you guys. Okay. Okay. In 1929, we kind of have the same sort of thing. So we went down, then we made some sort of like a V-shaped correction. Things were looking really, really good, and then of course what happened is, yeah, very, very bad things, right? So, like I said, although things look very, very good right now, and we sort of are looking towards having a V-shaped correction, right? Let's go back into what is going on right now. And here, as you can see here, we had a crash. Here, we had a crash, and things look like maybe it looks like we're gonna go back up a little bit more. Maybe we'll go all the way back up here, and then the question is what happens afterwards, right? So, yeah, am I bullish right now on S&P, on the stocks, and on everything? Yeah, because like I said, you can't be bearish when you see a chart like this. You can't be bearish. This is very constructive, still going up. But once we hit somewhere, you know, this, like I said, around these tops and these areas here, around this area where we have the massive block here, then yep, I don't know. We'll have to reanalyze, I guess, right? We have to reanalyze. But am I immediately bearish right now? No, I'm not immediately bearish right now. And that's the reason why I still kind of have a feeling that Bitcoin is going back towards the 10K levels, and even 11.5K maybe, or something like that, you know, something really crazy. And then get a major pullback. I mean, that's I mean, as long as S&P and Nasdaq and all the stocks are pushing up, I don't see any reason for Bitcoin to be going down. You know, that's basically the whole point of printing money, right? But for now, that doesn't mean that we cannot have small pullbacks, right? Small pullbacks. Yeah, not that kind of pullback. Hopefully, not that kind of pullback. But yeah. Welcome to Sundays, where a lot of things, not that many things happen at all. So I guess yeah, we've been through all the theory, we've been through all the data. Let's wrap it up, and let's put a bow on it, and let's wrap it up and show things where we are looking at once again. Well, basically what we said yesterday is still quite valid. We are looking at, if we do break and close some candles above this green EMA 55, which is currently at 9,314. If we start closing some candles above it, most likely we'll be heading back towards the 9.5k. If we can close above 9.5k, most likely we'll be going up even more towards the 9.8k. That's what we are looking at. Are we going to be breaking down and confirm some candles below the 9,050 here? We wicked down below for it already, so most likely we'll be doing it. Everything is showing that most likely we'll be going back more down than up right now, so we have to be taking that into consideration. And then most likely we'll be ending up here towards this area first, and eventually maybe a small bounce, and then end up in our green box on the down side here, between around 8.6k area. What will happen to Bitcoin and alts if the new money to come is backed by gold? Well, then everybody is going to be buying gold, right? Bitcoin is going to be suffering, I guess. I mean, money has to go somewhere, right? So if it goes to if all the money goes to gold, or all the money goes to the new money, then the rest is going to be suffering. But yeah, let's see what the government comes up with. Right now there's no issue, right? There's no crash. Everything is going up. So they won't be doing anything else than printing more money and pushing and pushing and pushing. But at one point, yeah, at one point it's going to be exploding, and it's going to be there's going to be a big problem. That's for sure. Anyways, so yeah, nothing new, nothing much in terms of Bitcoin analysis on the short term. However, on the long term, I hope you guys have a more better idea on what is possible and what is probable. And yeah, I know a lot of people will be hating on me and saying like, hey, so it can go to 9.8 or it can go to 8.6. So what shall we do? What can we do? Yeah. So yeah, that's not the whole purpose. The whole purpose is to be setting up trades, right? So to be setting up trades. So like I said, if we are starting to close candles below 9,050, yeah, it's quite okay to be putting in a short trade right there. If you are like who was it? Who was it? Nikolai. Yeah, Nikolai. If it was Nikolai basically said, well, we had this bounce towards 9.3k and we got rejected from the EMA 55, so I'll take a short, which is perfectly reasonable, and he understands where the risks are as well. Yeah, everybody's talking about a gold standard or anything like that. I still don't really think it will happen, but let's see. That's something for, that's too many ifs. Let's put it like that. For now, people are just gonna be printing money. That's the only thing that they're gonna try to do. So yeah, still, even though if we are pulling back, then still not too bearish. Still not too bearish. Like I said, if they keep printing, if the stock market still goes up, if Nasdaq still goes up, S&P still goes up, I don't see Bitcoin going up as not going up as well. So, but for now, short term, yeah, probabilities are more to the downside. I'll be looking more for a short position tomorrow. So like I said, what am I looking at? Pretty much the same thing as what Nikolai is doing, seeing if it gets rejected from some sort of big moving average, and then short it down from there. You were leaving your cash in PaxG crypto backed by gold, but since it's a crypto market, it starts to go down today. Yeah, Jeremy. I mean, you know, investments have risk, right? That's why you have risk management. You can't just like be disappointed because you made one losing trade, or you can be disappointed that you made one losing investment, and then you can just quit, right? I mean, be positive, man. Be positive. If you do believe in the long term of this of Bitcoin, then you should just let it roll, and let's look at it again, maybe in like 2 or 3 years, and then maybe things will be a lot better than that you expect, right? So it all depends on. Like I said, I'm not a financial. This is not financial advice. I'm not a financial advisor. I don't know what your situation or what your perspective is, or what you are trying to achieve in terms of your investment. So I can't give you any advice on it. So for some people, it is to hold it for a long period, and just to not look at it and take a look at their portfolio in like 3 to 5 years, knowing that it is a high risk. And get more percentage than what you're putting it for on the bank, on your bank or something like that. Because nowadays, if you put money on the bank, you're actually paying the bank rather than getting any interest, right? So yeah, or it is for trading, right? You can be day trading, you can be swing trading, you can be just doing a couple of trades in a month or something like that. So it all really depends on what you want to do and what you want to achieve with your investment. It's the same as like real estate, right? People don't, I mean, you buy a house not to, most likely not to be selling that house in like in like the next month or something like that. Well, you could, but I mean, most likely that's not the plan, right? So you buy a house and you think about maybe renting it out, and then maybe in 10 years you've recovered your investment, and then you sell it, and that'll be your profit after like 10 years or 15 years or something like that. So it's a little bit the same, the way that you have to be interpreting all these investments, right? If you were buying gold, trust me, I bought gold for like 5 years, and then my overall profit was like 35% on my gold or something like that. 35% is insane. It's an insane high for a commodity. But if you tell me if I only would make 35% on trading Bitcoin or something like that, people would be just laughing at you, right? it's just half, 35%, really, that's it. But yeah, for gold, that's a very high number. So yeah, once again, like I said, it all really depends on what your perspective is and what you want to achieve. Do more research and stay positive and calculate in that perspective, rather than in just a couple of days and thinking like, oh shit, I lost money, or something like that. All right, so I'll quit on that note. The lesson of today is to stay positive. All right. Once again, was great to spend some time on this beautiful Sunday with all of you guys, and I hope to see you again tomorrow, because tomorrow is definitely going to be worth it to be joining, because then of course we have the weekly candle close, we have the opening of the CME. Yeah, a lot of interesting things that we can go over with, and most likely we'll be knowing a lot more what the direction is for Bitcoin as well, right? So please like, share, comment, whatever you want to do with this content, and hope to speak to you again tomorrow, 7:30 p.m. UTC +8. And as always, please stay home, stay safe, and of course, stay COVID free.